Well, here we go, the Hunting Land Man podcast, episode 33. And yes, I just have to ask cameraman Caleb what episode it was because I never know. It is a theme here lately. If we're recording a podcast, it's going to be flooding outside, and it is right here. We're recording this on January the 3rd. And we got some bad weather coming in today, so we're praying and hoping everybody gets through this bad weather in Southwest Mississippi today safe. And we got good hunting weather coming in later this week, so everybody get in the woods. As always, the Hunting Land Man podcast is brought to you by Southern AgCredit. I can't tell you how much we work with these guys. We've got loans we're doing in Missouri right now with them. We got stuff we're always doing in Mississippi with our clients. Always looking for ways to put deals together, and these guys are the best at their business. Speaking of, that's who we've got here today. We've got Austin and Alex with Southern Ag. You've heard them on here before. We wanted to get here after the first of the year to kind of talk about where we are in the market and what's going on in the market. Interest rates, that's what we're calling this one. Why buy land now? Interest rates are very high. They're not at an all-time high. They're at a 30-month high or something like that. Well, first of all, thank y'all for coming on. And Alex takes care of a lot of our loans, and Austin does too. Austin is is Austin technically your boss?
We're kind of equal level.
Equal,
yeah.
Okay.
Yeah.
They answered the same, so I guess this is true. Well, tell me this. We'll go ahead and kick this thing off. I'll answer after y'all about where we are in the market. What are we seeing? It's January 3rd, so we got through the gruelingly slow holiday season. If you are in commissions and sales like us, it's kind of grueling because you sit around thinking a lot and you're ready to get the next year going. So, first of all, Alex, where are you at? And, I call them pendings in my world. I think y'all call them loan apps.
Same. It's same. I mean, we call it a CRM or a pipeline, just like y'all do. I mean, they're all in different stages. From on your side of it, you see it from a listing to contract to close, where we see it probably to application to approval, appraisal, close in that phase. So, oh man, January is going to be good for me. I know we're sitting probably around $8 million set to close between the next 3 months, which is a good start for, relatively speaking, in January. Because as much work as we did, which we had another record-breaking year last year, you roll back in on January 2nd or 3rd, you look up and the pipeline says 0, because that's just how it flows over. So as the longer you stay in this business, and I know Austin can agree with me, as important as the year is itself, November and December are just as important to start filling the pipeline for the following year, because you can go ahead and any closing you have, you just like on y'all side, you can expect 30 days, 45 days to get things closed, and holidays roll around, and attorneys take off and appraisers take their time, and you know how that operates, and can be the headache. But man, things are rolling for us in January. I know just by tomorrow, like I said, we're in the 3rd day, and we got $600,000 ready to close just in day 3. So, man, I'm excited about where we're headed as far as, people talk about the real estate market and, hey, it's going to slow down. Man, I just disagree. I find it complete disagreement.
What, Alex, and you may know this off the top of your head, but give me an average. What is your normal amount of loans in app, and where are you at today?
Right now, I'd say we've got about, if I want to look at it correctly, about 24 loans pending. In the pre-approval stage, we've probably got about 8 to 9 in the pre-approval stage. The rest of them are either waiting on appraisals or set to close is where we're at.
All right, Austin, kind of give me your take on the exact same question. Where do you think we're at in the market? What's your normal in pending, and where are you at today? And the reason I ask this for everybody else, like y'all hear Slade, the salesman, we're selling land, always not a good time to buy land. I'm going to show you that most of these aren't with Slade. This is what the market's doing. So tell me where you're at.
Yeah, I would say on average in our Brookhaven branch, we probably have 40, 50 applications going at any one time. Right now, starting out the year, I'd say we're probably at 30 right now. So it's not a huge dip in the market. And I really right before Thanksgiving, we really saw an uptick in applications, to be completely honest with you. And we got several on my desk that we got to put in. So not a huge, I mean, we're right there where we typically are. Like Alex said, Southern AgCredit had a record year again in 2022, and we're thankful for all our borrowers who made that possible. And when January 1 rolls around, we all get back to the office and we're sitting at zero. So it's like you said, we enjoyed the little break for Christmas and New Year's, but we're kind of sitting around ready to go because we don't want to sit on that zero very long.
That's right. That's right. Something I've never asked either one of y'all. This is, I guess, this is for personal reasons. If you've got have y'all ever looked at what percentage of y'all's loans, first of all, are with Louisiana buyers, which I know most of my sales are, and also how much of it is recreation versus, say, buying timberland or buying cattle land, stuff like that? What's the percentages?
Well, that's a good question because some people in our industry or at Southern AgCredit specialize in different things. Everybody, the reality is the easy loan, and Austin will agree with me, is the hunting recreational loan. The guy coming in to buy something to hunt on and invest in. But we got guys in other parts of the market that specialize in the cattle industry and the row crop industry, that the poultry industry, yeah, very big poultry industry, that kind of handle up that part. But I'd say, man, I look at it all the time. 95%, I could tell you right now, 95% of my business is the hunting and recreational, which is what I want. Now I come, as you know, I was a real estate broker once upon a time. I came from that side and did only land, so I transitioned over to this side of the table, made that transition relatively easy where that was my niche, that's what I was taking, that's what I was going to run with. But, I'd say 95% of my business is going to be hunting recreational, and I can tell you in 2022, looking at this last year, it was 68% from the state of Louisiana.
Wow. And
just my office alone in the hunting recreational industry. So it's a big, obviously us being close to Louisiana is going to be part of that. And so this, as well as Brookhaven. So I'd be willing to say your number's going to be pretty similar.
I would say in Brookhaven, like Alex said, 95, probably 98% if you really put the numbers on paper, are recreational tracts that we finance out of our office. And I would say Louisiana customers are probably at least 40% of those loans are going to be Louisiana residents coming up here.
And, Austin actually is from Amite County. So, yes, his office is in Brookhaven, but he's kind of like me. We live real close to the state line. And so Louisiana is I've heard it. Oh man, you're from way up there in Mississippi. I live 4 miles north of the state line. Right. The closest gas station from my house is in Louisiana.
Right. And Pearl River County, where I'm from, being 8 miles from the North Shore. North Shore of New Orleans, from Mandeville, Covington, Slidell, those areas, which is a lot of money floating around those areas. They carry over to Lafayette and those bigger areas too. But we're blessed with these travel corridors, right? I-55, I-59.
61, baby.
Yeah,
where big deer live.
Major highways that get people in and out of their house fast on a Friday and in the stand quick on Friday evening.
So. Man, you put that on a T-shirt. That's good. That's good. Well, something that Austin and I were talking about when we were waiting on Alex, of course, we were Okay, so answer me this: where are we at prime today? Where's the prime rate today?
I didn't check prime, but it was around, if I remember correctly, now, also you may do better. I don't do a whole lot on prime, just not yet. Around 7%, if I looked at it, 7.25.
As of today's slate, I believe prime is 7.5.
Okay, 7.5. So let's just assume you're going to get your loan at Southern Ag or any other bank at 7.5. One thing different with Southern Ag and with any land bank is you're going to get your 1% back a year, your patronage check, and that's a real check. That's not just a sales too. Basically, it calculates into about 1 month of payments. Yep. You're going to get those back. So that's huge. So essentially your effective rate is going to be 1% less than most other banks because of that. When we buy, this is all coming off the top of my head, but when we buy recreational land, usually the people that buy this stuff are busy with their job, or they're doctors or attorneys, or they have a business, or they're, a highly paid employee. And we want this stuff to be fun. We want the buying process to be fun. We want the closing process to be fun. And of course, we want the land to be fun. What you don't want is a headache buying process to get the bad taste in your mouth about your tract of land. Okay, let me tell you why I like dealing with these guys, and this is not a sales pitch because they sponsor the podcast. I promise you, if they made my life hard, I'd find somebody else to sponsor the podcast. I mean, it's not worth it. From the appraisal process, they have in-house appraisers that pick up the phone and call your agent like me. And we get them done. It's part of it's free appraisals, correct?
It's
Free appraisals. They know land. It's not some guy out of New Orleans or Baton Rouge or Covington that doesn't know nothing about land. And they just pull some numbers out of the sky, and they know that you bought on the west side. I'm just throwing numbers out there. You bought on the west side of 61 because the big deer are there. And the reason you bought and you paid more for this area is because you got great neighbors and stuff like that. Literally, this stuff comes into appraisals. Austin and I were talking about it earlier. Used to be, and you've heard Slade talk about it before, the way things were appraised in Southwest Mississippi, Wilkes-Barre, Adams County, Amite County, dirt, timber, camp price, or close to that. Mm-hmm. Man, it's gotten so heavy recreational. It's kind of like, well, this is what they sell for. And you think, okay, Slade, when's it going to go away? Big bad COVID is over and it's going to go away. Google right now on Land Watcher on my website in Southwest Mississippi. There's not a lot for sale. And when it comes up, guess what? It's selling before it hits the market. It's selling fast. It's selling for top dollar. I had contracted one yesterday that I will agree was a touch over price. But was it? Just what the buyer wanted? Paid 94% of asking price, and it's a great property that he will enjoy for a long term, and it accomplished all his goal. And guess what? Now that one's gone, there's not another one like it for sale.
Mm-hmm. Well, look, we've talked about it before on the podcast, man. One thing that I've always, and this goes to your nationwide listeners in dealing with their farm credit, the reality is our appraisers they recognize recreational value. It has to be accounted for. Go back and look at the history, and I was talking about this last week with somebody. Go look back and look at the history of WRP tracts in the Delta. You're buying WRP tracts for $800 an acre, $700 an acre, and now I'm seeing appraisals go across the board for WRP at $2,200 to $2,500 an acre.
Oh, and over in Tensall Parish stuff, I got $3,500.
And what can you do with WRP? You're going to duck hunt it. That's it. You can't alter the state of that land in any way, shape, or form. And nobody's disagreeing with that value. And, now an everyday appraiser can sometimes go out there and has to, go by the book on things. But the reality is your farm credits are going to really do a good job of recognizing the recreational value, the dirt value, your timber value. All of it goes into account. And I encourage people sometimes when we see these reports, read into the description of that appraisal. You'll see, hey, this area is known for its recreational hunting more so than this part of the county. I mean, it all goes in a full circle. But man, I couldn't agree with you more. Where, man, I go back to what I opened with: the market's not slowing down, and people are spending money, and values are still holding really, really well.
You brought up a good point. So whenever these appraisals happen, and no matter if it's one of y'all's appraisers or Landon over at First South or any appraiser, I think as the market changes, I'm not going to say it slows down, it changes. I think that your skilled bankers, your skilled agents, and what I told my team in our Christmas party, listen, the market's changing. The person who's sharpening their sword right now and who has the sharpest swords coming into this summer market are going to win. Things are not going to be as easy as they were. It's going to be hard. And so let's say you hire a Joe Blow real estate agent, and he does a little land, he does a little housing, he just got into the game, he don't know anything, and he can't communicate to one of y'all's appraisers, Walter, anybody else, or he can't communicate that here's the comps and this is why. So when we list stuff, we start there. Okay, if we list here and it gets 95% of value, is it going to appraise? Because that's the formula. If they just throw a number and see what sticks, and then by the time we get the deal blows up, that's not y'all's or the appraisal's fault. That should have been taken care of, and you should have told your client, your seller client, the hard truth from the beginning. This is what your place is going to appraise.
Absolutely, 100%.
And if you don't get the agent that is skilled with that, who has sharpened their sword in that, like I have a list in my office a big map in Wilkes County of comps. So when somebody argues with me about prices, I say, well, here they are. Here's the comps. I got everything you need.
And how many times have our appraisers called you directly and said, hey, Slade, can you provide us that
every
comp?
time?
Exactly.
Every time.
Exactly.
And so what I'm saying is we work together to make this closing process easy. All right, we're going to go into something that Austin and I, everything on my list, Austin and I talked about before the podcast and gave me all these ideas. So first of all, prime is high. Prime's at 7.5. You're going to get if it's at 7.5, you're going to get your loan with Southern Ag at 6.5. Okay, I just Googled some stuff. All right, in 2000, whenever I was a 10th or 11th grade in high school, I guess I'd be 11th grade right now. Prime, 8.75. March of 2000, prime, 9. May of 2000, 9.5. Let's scroll all the way down. We did in 01 get down to 5, 4.75, 4.25, 4. All right, and then back up to May of 06, we're at 8. Those aren't long time. It's not that long ago. Okay, something that Austin brought up, speaking of prime and why I still say now is the time to buy land. All right, let me ask y'all both this. Is land going to be worth, pending Russia, China, and things we can't control, is land going to be worth more 5 years from now than it is now? Can we agree on that?
I would agree.
Okay. All right. Is interest rates going to come down between now and 5 years from now?
Man,
I would think so.
Historically speaking, yes.
Yes.
Absolutely.
Okay.
Historically speaking.
Okay. Refining land with Southern Ag. I'm going to ask you this, Austin. Tell me, okay, I get my loan today, Slate at 6.5. I'm going to bite that bullet. I don't like it, but I want to have it low. And then we get election happens, and in 2024, interest rates are back at 5.75.
Right.
What's my process for a refi?
Real simple. And you use the term refi. In our world, it's a little different. We call it a rate conversion.
Okay.
If you get a loan with us, say you close a loan today and just say it's 8% to make numbers easy. And then in 3 years, rates fall and it's 4%. More than likely, we're going to call you before you even realize it. And we're going to say, hey, Slade, we'd like to do a rate conversion. We can lower your rate to this, which would change your payment to this. And the first time that we do that for you, we do it for free, $0. So we'll call you and say, Slade, we're going to lower your rate to this rate, which would change your payment to this for $0 if you'll just sign one form.
So the bank, y'all heard this, the bank is going to call you and they're going to make your payments less and they're going to do it for free.
That's right.
Call your commercial lender and ask them if they'll do that.
I'm going to chime in real quick. This is how good a banker I am. I did it for Slade and he didn't even realize it. Right. I just said, hey man, sign this when I send it to you during COVID.
It's kind of like I tell all my agents that work for me, like in Missouri and stuff like that, dude, if I have to read all the forms, I don't want to work. I don't want you working for me.
Right.
Like I'm assuming me and you got it correct.
Right. But to tell you the process, kind of behind the stage process, we get reports every month. Branch managers do, Alex and I, and we can go through those reports and we can see where everyone's rate is and if there's any room there to convert them down. And whenever there's a big drop in the market in the rates like we had during COVID, we did hundreds of conversions during COVID, then yes, we will call you up and say, hey, Slade, we just need you to sign this in the e-sign in your email or come by the office and sign this and we'll lower your rate for you. And typically we say we do the first time free just because every now and then you'll run into somebody who like every day, if rates drop a little bit more, they want another one every day. But typically once we get that big break, we will call you, we'll convert your rate for a lower rate at no cost. We just need you to sign.
So the bank's going to call you and get your payments lower. Let me just put this in layman's terms. He's going to get your payments lower. You can put that money back in your pocket. You can take your family on a vacation. You can take your family on a hunt. You can put the box stands or the camp you wanted on your place just because you picked the right bank to deal with. So remember, when you're deciding what bank you want to use and it's really close, is your other bank, your commercial lender, are they going to do these sort of things 5 years? Don't think 5 minutes from now. Think 5 years from now.
Right. And just to be clear, you will, even if you do a rate conversion, you will still get the average 1% patronage refund sent to you. That doesn't change anything. Typically, most of ours, I'd say 99% of ours, don't have a prepayment penalty, so there's no prepayment penalty. You can pay extra, pay off at any time. So none of that, nothing is affected with your loan other than we're lowering your rate, which in effect is causing you to pay less interest in your payment.
Or, you could keep paying the same amount and pay your loan off faster.
That's right.
Get it more equity in your property.
Or even take it a step forward. We talked about this on a podcast 3 weeks ago with some other folks, with Ben Smith. Or no, it wasn't Ben. I can't remember. Anyway, refinancing. The other beauty to what we do is called a reamaturization. And it's another step process. We can convert the rates free of charge, right? Well, when you think reamortization, people think, oh, well, what exactly is that? Well, say you've been paying extra each month, even on the higher rate, and you come in every year, and I have this happen all the time. People come in, put $50,000 down towards their principal with their big annual bonus or whatever it may be, and over 4 years, they've paid down $300,000 on their loan, just using that number as an example. Well, once again, no refinance is required in that case. We can actually reamortize your debt to restructure your payment based on the outstanding balance. So if you're paying, 7% on $1 million and you've paid down to $700,000 and the rates have dropped, we can not only drop the rate, but we can reamortize that debt structured on $700,000 versus the $1 million. More money in your pocket each month, right? That's even more. So, really, like I said, from farm credit standpoint, what we can do at Southern Ag, the sky's the limit, man, to save you money. Our goal is to save you as much money as we can. So it's the front end money, it's the back end money. From the front end money being the appraisal, we cover all that, and then your stock that you're getting paid back. And the reamortization, we charge $500 instead of coming in and getting updated title work, updated appraisal.
Probably one payment will take care of that.
That's right. And even that, sometimes, I'll say this with an asterisk, sometimes we will get an updated appraisal depending on how long that process has been, because market changes. We may have appraised it for lower, it could be worth more. But man, an easy process to reamortize the debt with some updated financial information, and we're not waiting on an attorney to do anything. We're not waiting on, typically not waiting on an appraiser. We just update it financially. Hey, it's good to go. Let's roll on.
So something I'm most excited about, and we kind of got off on a tangent, and it's good tangent. Mm-hmm. Something I'm most excited about is something Austin said earlier. Every one of my clients and every one of y'all's clients, same people, we think, and I'm the same way, hey man, we're going to buy this place in Adams County and Yazoo County, and we're going to kill big bucks. What ends up happening is, like, I've been calling a lot of my clients Happy New Year, Christmas, and they tell me the stories about what they use their land for. Man, Slade, I got my camp up there, just like I told you I was going to get. Had the whole family up this weekend. Grandbabies, had everybody. We didn't kill any deer, because kids ripping and running, but man, that's what I wanted. It's more about watching the game and cooking, and yes, of course, it's about the deer, but it almost 100% of the time, it's about getting that family member up there to kill their first deer, or the grandpa or the dad bought this place so he could bring their family together, or teach their kids about work and food plots and timber and management, or cattle or whatever. So Austin was talking about, Austin is finishing his house right now. Y'all all say a prayer for him.
Yeah, really.
And anyway, and if you know anything, building costs are high. It's hard to get stuff right now. So you think, okay, a guy smart as Austin, he's doing loans and stuff. Why is he building now? Well, the same reason I built 2 years ago. There's a time in life for everything. Okay, Austin had kids a lot the same age as mine. He's got one that's 5, one that's 2, and so he's got essentially 13 years where she's going to be at home. Okay, he finishes his home this year. She gets her room with her unicorns on the wall, or pick your poison, dinosaurs at my house, and unicorns. And with our clients, it's the same way. Okay, so my little boy, for instance, he killed a big buck on our place the other day. That Southern Ag helped me finance at one time. Killed it 400 yards in front of my house. Y'all know I've never killed a deer on this place. I've owned it 4 years. The hunting land man has never killed a deer. My wife has shot and missed a deer. My son has killed 2 bucks and he's missed a deer. I've never killed one. So you think, oh, Slade, the hunter, the guy, he bought it for killing big bucks. Okay, but it's just like I was going back to, there's a season. My little boy turning 11 the end of this week. He just got his first rifle that's his. We sat in this weekend on my place, and we tried to get us a doe, but between the coughing and the iPads turning up too loud with my ace, so we didn't kill anything. Shocker. But anyway, I have 7 more seasons till who knows if he goes, off to college, or he, maybe gets too busy chasing girls or sports or whatever. But I've got 7 seasons where I'm kind of in control of where we go and what we do. We're riding 4-wheelers and side-by-sides and hunting. These interest rates, they're a little bit higher than we'd like them to be. We'd all be smiling if they dropped a point today, but they're not. But what's not going to change is that time frame.
That's right. And
let's say, look, most of our borrowers are pretty high net worth people. I mean, if they're going to buy these land, and that's a relative term. High net worth is at $100 million bucks or 500, whatever. If you have to pay a couple $1,000s in interest while we wait on interest rates to come down over a couple of years, but you get a year or 2, or like me, your son kills his biggest deer. When y'all watch that episode and Bentley shoots that deer, the happiest guy in that deer stand was not the guy who pulled the trigger.
It was you.
And I told my wife, she said, "God, dog, you're so excited." I'm like, you got to realize the build up to this. I started buying and selling land in 2007. I flipped probably 10 tracts to buy that tract of land. And then my little boy killed a 130-inch 8-point on my tract. That didn't happen that afternoon. That was 10 years, 15 years in motion of that happening. So what I said, to get that kind of emotion and get that excited of, the 2 points on the interest rate, if we're going to come down in 2 years, hey, if it's that big a deal, go work a little extra overtime. Do a little bit extra. Like, don't buy the $70,000 truck, buy the $60,000 truck. Let's get them kids in the woods on side-by-sides, off the iPads.
That's right.
And dude, I'm a testament to that, because my little girl, all she wants to do is go hunting with Daddy, hates when I leave the house to go shoot a hog without her. Me and my little boy are closer because of hunting on our own places. You can't do that on your stock portfolio.
That's right. I say it's all about the family, and we use the word, it's all about legacy. Mm-hmm. And I have a video that I do in a lot of my presentations that's about that, and our customers talk about that. But it's about having that piece of property where everybody can get, where they're laughing and they're around the fire and they're playing, they're throwing the ball, riding 4-wheelers. Sitting in the box stand with the iPad and the pink headphones like I was doing last night. It's all about that. And
now, did you have the pink headphones on?
I did. Oh. I had to make sure it was quiet in there. But anyway, it's all about that, and that's what we want to do. And you're right. Interest rates are a little bit higher. None of us are happy about it. But it just kind of is what it is. But that didn't stop me from building a house. I wanted a house in a Mitt County in the country. It's at the end of my parents' 500-acre farm, so I joined the family place. They can ride to Mamie and BB's house. They can look out their windows and see the turkeys and the deer and had the dog out. That's what I wanted for my family at this stage. So yeah, I was okay with building a house in 40-year high inflation, and I was okay with the higher interest rate, because that's the stage that I'm at, and that's what I want to establish my family and my legacy right there in the Mitt County. That's been the dream, and it's going to be my forever home. I'm not flipping it or going to sell it. Mm-hmm. That's where, Lord willing, that's where I'm going to die. So that's what it's all about. It wasn't about the cost. It wasn't about the interest rates. It was about establishing that. And then one day when rates fall, guess what I'm going to do? I'm going to ask my mortgage company to refinance it and lower that rate. But that's just what you do. And I think you see a lot of that from our borrowers. They have always had in their head that they wanted a hunting track. They wanted a place they could leave town or leave their house and get to in an hour and a half. And have that hunting track where they have that camp where the kids ride the 4-wheeler, shoot the 22s, come up for Thanksgiving, whatever it may be. And yeah, the interest rates may drop you from buying a 300-acre place to a 200-acre place, but that's your plan, and that's what you want to do for your family and for your legacy. So most people are still buying those tracts, and when rates drop or when something next to you comes up for sale, then you can just keep adding to it and adding to that legacy. But I think that's what we see in our customers. That's what we see in myself and in you. And the great thing about working with Southern Ag is when you get with someone, whether I was in the box stand with my little 4-year-old last night, Alex is even a bigger hunter than I am. You do it. If you get one of our appraisers, say Walt, he hunts, he does it. So any of these folks you work with at Southern AgCredit, they've probably been at their camp this weekend. They've probably been cleaning up their interior roads or checking out their food plots or sighting in the rifle. So when you sit down with someone, just like they sit down with you, Slade, because your knowledge and your pro in the land industry, when you sit down with Southern AgCredit, you kind of get the same thing. We all do the same thing, love the same thing, and it's easier working with each other whenever we're all striving for the same thing. It's like you said earlier, Southern AgCredit, we want the loan to close as soon as possible. We want the loan on the books and accruing interest as soon as possible. We want our buyers to have their place and be sighting in guns as soon as possible. We want our real estate agents to get their commissions as soon as possible.
Amen.
And we want our closing attorneys to get their fees as soon as possible. So we're all in this together, and like the things that you do on the front end by getting comps to our appraisers or talking with our appraisers about things, all those little things get us to the closing table faster, and that's why relationships like we have with you and with other folks, anything that can happen, whether it's comps at the front end, legal description at the front end, contract at the front end, whatever it may be, any little thing that gets us to that closing table the fastest, that's what we all want, and that's why we all strive to do it as fast as we can.
Austin said something and it perked my interest. He said, okay, maybe rates are higher, your loan will be higher, and you're going to buy a 200-acre farm instead of a 300-acre farm. And what other place other than the land business can you say, you know what, we're going to buy this 200-acre farm for 5 years. We're going to, get our equity up, and then guess what? When interest rates drop, and we don't have to settle for a 300. We won't buy a 350 or a 400. Right. And guess what? My 200-acre went up in value because, we had timber growing, or we managed the deer better, or we did some sweat equity. And guess what? You still get to have those experiences with your kids with the pink headphones or sighting in your gun while you're waiting on them to come down. You don't have to wait, and you just change the game a little bit. Hey, we instead of having a place with 6 food plots, we got a place with 4. Who cares?
And the other thing is you kind of get some experience. So you start out with the smaller place, you're getting experience on how you want to manage it, how you want to do things. Oh, that was stupid, I shouldn't have done that. Oh, this was great. And then as you kind of continue to grow into the future in 5 years, whatever it may be, then you kind of had that experience along the way as you're growing that. Whereas if you just try to start off with a 500-acre place, you may run into some headache. So it's a lot of benefit to kind of getting started, getting that family, that legacy started, and then building upon it as you can.
It's never a bad time to get in the land game. I would say 95% of your borrowers or my clients would say, I wish I would have got in it sooner. And I've noticed through the podcast, I have people all the time contacting me through social media or my website or whatever, younger in their 20s. Slade, I want to get in the game. How do I get started? You got to take the plunge. Buy smart. Get educated people, like Southern Ag, or a good agent. Buy smart, educate yourself. Don't rely on just your agent. And you got to do some self-education, just like you would do with any stock or anything like that. Don't go blindly into it. I tell you what, stuff like this gets me fired up about the land business. I'm ready for 2023. Just like they said earlier, Slade had a great year last year, but I started off in last place on 12/31 at midnight. I started off in last place, but we got some stuff closing soon. All right, one thing we definitely want to talk about, and this is something, big asterisk here, perfect world, but we like perfect world. Sometimes it lines up. It's never really been brought up before because we've never had a time in our recent history where interest rates went from 4 to 7. That's fast, and I'm just using relative numbers. So with any land bank, Southern Ag, or any, if you're Missouri Land Bank or whatever they call them up there, we have, they have an option. Like if let's say I bought a farm last year and my rate was at 5%. I bought $1 million for it. I'm just using round numbers. And Alex comes in and says, Slade, I'd like to buy that farm. Who do you have it financed with? Southern AgCredit. Well, if Alex wants to do business with Southern AgCredit and all of his financials line up in a perfect world, he can do what's called a loan assumption, and come in at that 5% interest rate. Now, let's say Slade made $100,000 in the deal, and so they got an extra $100,000. Well, that extra $100,000 maybe have to be borrowed at the 7.5. Austin, touch on that. Tell me, and look, big asterisk, this does not happen every day, but it's something that needs to be asked.
Yeah, it's not something that happens every day. It kind of just needs to line up, but it's something everybody needs to be aware about. And what I tell folks is it never hurts to ask. So if you're a buyer out there and you know the seller has it financed with Southern AgCredit, and you call me or Alex, what I plan to do is get out my yellow legal pad and I'm going to write both options out. I'm going to say this is kind of what it would be if you did an assumption, and this is what it would be if you did a brand new loan. Okay, the assumption, for those of you that don't know, is like Slade's example there. If he borrowed $1 million, okay, and say his current, let's just, to make numbers easy, say his current balance now after a year was $950,000, okay, and then he wanted to sell it to Alex. Alex, if credit and everything lines up, could come in and assume that loan. And what he's doing is when he assumes that loan, he's taking Slade's loan exactly like it is today. That loan balance, that rate, that payment, those terms, and he's assuming that, okay? Yes, that is possible. Yes, we can do it. We haven't done a lot of it over the years just because we kind of haven't been in this situation over the years, but I've done several assumptions. Typically have been with family members, father, son, uncle, nephew, we've done assumptions like that. But it's something that more and more people are asking about now because of the difference in interest rate. So to answer your question, yes, assumptions can be done. Yes, the way I would do it, if you know that the seller has it financed with Southern AgCredit, just get with the loan officer, get with Alex or myself, and let's go through the options and let's see what's best for you. We can kind of put, okay, this is what it would be if you did an assumption. This is what it would be if you just did a new loan on it, and figure out what's best for you. The only thing with the assumption is if Alex is assuming that loan for $950,000, because that's what you got it paid down to, but you're selling it to him for 1.2, okay, then he either has to come up with the difference in cash, or we would have to do some other type of loan for that difference to get him to 80%. If he can't cover it in cash. So there's a few things there. It has to work out. But what I tell you, if your credit's good enough and you're looking to buy a piece of property and the appraisal's good, we're willing to look at anything for you. And an assumption is a possibility. And just reach out to us, and we'll look at that and kind of get both options for you and see if that works. The way the assumption, just to get in the details, Slade signed a note and Slade signed a deed of trust when he got his loan, okay? That note and deed of trust that Slade signed stays of record, okay? And what you do with an assumption is Alex and you, okay, would sign documents saying Slade's given Alex that note, Slade's given Alex that deed of trust, okay? So the deed of trust that we're still running with on the bank has got Slade's name on it. The note still got Slade's name on it. But what y'all do, we'll sign an assumption agreement that basically allows him to take that, okay? The other thing in the details is the $1,000 stock. Everybody knows if you get a loan with Southern AgCredit, you got $1,000 stock. You would also give Alex that $1,000 stock, so you wouldn't necessarily get refunded that $1,000. Now, I guess in a negotiation or whatever y'all want to do, y'all could work that out. But I just wanted to be clear on that $1,000. That would be something that y'all would need to work on. But
and still got to stay at the 80% loan to value.
That's right, 80% loan to value.
So even if you're assuming, the loan, you still, if there's a $200,000 down payment or whatever, that still comes into play. But man, what an opportunity for somebody that, ask your agent, man, hey, who does your seller have? Who does that seller have? You're not trying to get into personal business, but if it makes it a good deal for everybody, why not?
That's right.
And the fact that these two guys are sitting here talking about, look, the bank's going to make less money doing this. But they care about their borrowers. These are about long-term relationships. We said earlier, we're not thinking about the next 5 minutes, we're talking about the next 5 years, the next 30 years. And that's the type of relationships these guys want to set up, just like the Hunt and Land Man team and Southern States Realty wants to set up with their clients.
One other thing, Slade, just while I'm thinking about it before I forget, I was speaking with one of my borrowers last week. He had bought a place and he paid down his loan to about $500,000. And he's had it for about 3 years, and he's now fixing to buy something bigger. Okay, so he's going to sell his place and purchase a bigger tract. When we put the numbers together, it appears that once he sells this, takes that money, puts it towards the next purchase, that all he's going to need is another $500,000 loan. Well, we have a better rate on that loan that he's got now. So we have talked about a collateral swap. If we can get his sale and his purchase to close on the same day, okay, there's some things that's got to line up, but if we can get to the close on the same day, then when he sells his property, I will do a partial release, okay, of that property he's selling so that whoever's financing or buying it can have it. And at the same time, file a new deed of trust on what he is buying and keep that loan amount of $500,000 at his rate that he had 3 years ago in terms, etc. So just to mention something else that's out there, we got loan assumptions, we got collateral swaps. Kind of has to line up, kind of has to be a perfect scenario, but it's something that is available out there. Just ask your loan officer, ask your real estate agent if they know who's got it financed right now, and it's something to look at.
That is, it's a lot of options right there. And look, we do this all day, every day. I'm sure there's people out there scratching their heads. Y'all using a lot of big words, loan assumption, collateral swap. But this is what these guys are here for. You call them and tell them your scenario. They say, okay, this is all the numbers and the words that actually matter to you. And look, pick up the phone, call me, and we'll figure out how to get it there. And look, I don't claim to be a banking expert. I've got two sitting in front of me. That's why I'm sitting here asking them questions. And that's the way you should do. If you have legal advice, you ask your attorney. You have banking advice, you ask your banker. You have real estate advice, ask your real estate agent. This is all really good stuff, man. It really, to me, as a borrower with Southern AgCredit, and if you're out there wanting to become a borrower of our bank, what other bank is going to what other guy's going to say, hey, stop. I'm going to take some time out of my day to figure out how to, you're going to pay this 5% instead of this 7.5%. They're doing that for you. So I think that speaks volumes right there. And like I said earlier, they're sitting here telling how their bank's going to make less money, but they're about the 5 year, not the 5 minute. I had a couple things here. We kind of touched on some of these. Look, I put on here stock market versus land. Look, I don't know, with everything going crazy with Russia and the market and stuff like that, nobody knows what's going on right now. But let me tell you what's going on with land. I say it all the time. Still doing this. We may have been doing this and we've done this, but we're still going up. I think we can all agree it's in 5 years it's going to be worth more than it is today. I know you've got family land you just built a house on, so you believe in it. You're looking at buying land in Missouri, have your riser's place in Holmes County. So, I mean, we're practicing what we're preaching.
Well, you said it best. I've actually stole this from you, Slade, telling our customers and our borrowers, man, when someone holds the power of a word in Washington to say something, to dictate what's going to happen tomorrow in the market, I don't trust that investment at all. And so, man, yeah, there you go. So they ain't making any more land. So like you said, yeah, maybe it's leveled off a little bit, but man, that's the investment, man. That's where you want to be. And that's why, honestly, we're seeing that. I've seen more folks, I would say even in November and December, folks who had stocks or, some little cash accounts that they've been piling up over the years. And finally things are kind of just what they are. And they're exactly what things are being said in DC. Elon Musk holds a lot of a lot of power with his words. That hey, he's actually said, hey, I can do this, and the market will do this tomorrow. We've seen more people cashing out those equities, those cash accounts, those whatever they are, to buy land. And look, there's a lot of money piled up that I think it's got to continue to sustain. I think you'll still deal with a lot of cash buyers like y'all deal with a lot. When people really cash them out, but man, I got more people in the last 2 months, over 18 loans that were just cashing in for, 401ks, market, little equities or whatever they were, because they weren't doing anything anymore. So they put it back in the land, and, And then there were some good deals that happened in November and December, and I'm just talking over the last 2 months. So that's why I'm confident in where the land's headed. That's just a small sample size right there that, man, I think 2023 is going to be really good.
Well,
I
I'm
really
excited
do.
about it. I think we're gonna break records again this year. We kind of gonna finish this thing up. Something that I wanted that y'all have brought to my attention. I knew this. I brought to my attention throughout this podcast. I think this is great to be said. We got 2 loan officers right here. I guess that's y'all's titles. Or with Southern Ag, they both own land. They both have their places they want for their families to grow up, hunt on, personal hunt on, things like that. Don't borrow money from bankers and land people that don't have the same passion as you, because I don't know, you just don't. That's who I trust. That's who I get. That's my people. That's my people. And don't find you a real estate agent that's not buying and selling land and having the same passion as you. If you're going to put your trust in these people, make sure your goals align. Make sure your goals align. Alex is a diehard hunter. I know Austin brings his family hunting, and his family has hunted his whole life, built his house where his kids can see deer and turkeys from the yards. If your loan officer or your agent, if they don't have that kind of passion, man, it's how are they going to understand your passion if they don't have that kind of passion? Look, if I'm selling you a set of ice skates, I hate ice skating. I went over there to Brookhaven the other day about killed myself. Guess what? I don't have no passion for ice skating. I don't need to sell you ice skates. I don't know where I came up with that analogy, but if you don't have a passion for land, you don't need to be selling. If you have invested your whole life, you worked hard, sweat, and sacrificed your whole life to get this $1 million so you can buy a tract of land, don't you want somebody that has that kind of respect for your money and land ownership and hunting to help you invest that land? And we're going to leave it at that on the Hunt Land Man podcast. Don't borrow money from people that don't have a passion for land like you do, and don't have an agent that don't have a passion for land like you do.
Couldn't have said it better.